Hello and welcome back to Boni's Life, your weekly dose of intellectual insight into the world of crypto and finance. I'm Boni, and this week we're navigating a market that's standing on a knife's edge. We've seen some serious volatility, with Bitcoin testing the all-important $100,000 level. Is this a healthy correction before the next leg up or the start of something more sinister? We'll dissect it all, from the technical charts to the global economic chess game. And of course, I'll give you my playbook for how to trade it. Let's get into it. Alright, let's start with our technical autopsy of the past week. The charts don't lie, but they do sometimes speak in riddles. The big story was Bitcoin's retreat from the $110,000 resistance zone. After opening the week around $109,500, we saw a sharp decline, with the price finding a temporary floor around $101,325. As of this recording, we're hovering just above that at about $101,800. That's a roughly 7% drop for the week, a classic crypto roller coaster. What's concerning is the volume. We saw a nearly 47% drop in 24-hour trading volume on Bitcoin. That tells me the recent bounce off the lows lacks conviction. It's like trying to start a car with a weak battery. It might crank a few times, but it's not roaring to life. We are also seeing what could be the formation of a head and shoulders pattern on the daily chart, a classic bearish reversal signal. The neckline is around the $103,000 mark. A sustained break below that could see us testing the high 90s very quickly. Looking at the indicators, the daily RSI is neutral at 51, but it's showing bearish divergence, meaning the momentum of the bounces is getting weaker. The MACD has also had a bearish crossover, confirming that sellers are currently in control. We are, however, testing the lower Bollinger Band, which can sometimes signal an oversold bounce is due. So, we're in a state of technical conflict. While Bitcoin stumbled, some altcoins danced. Filecoin, FIL, was up a staggering 53%, and Internet Computer, ICP, rocketed over 120%. This shows there's still speculative appetite in the market, but it's selective. Ethereum, on the other hand, has shown relative weakness, underperforming Bitcoin with a 12.6% drop. This is a flight to quality within crypto, where in times of uncertainty, capital flows from altcoins back to the king, Bitcoin. Bitcoin dominance has risen to 59.2%, confirming this trend. Now, let's look ahead, because this coming week is packed with events that could either fuel the next rally or pour gasoline on the fire. We have a calendar loaded with both crypto-native events and major global economic data. First, in the crypto world, the big one to watch is the Linear Token Unlock on Monday, November 10th. They are unlocking a massive 2.88 billion tokens, which is over 16% of their released supply. An event of this magnitude can put significant selling pressure on a token and the broader market. Also on the radar is the Berachain Mainnet event on Saturday, November 16th. This is a major milestone for a highly anticipated Layer 1, and a successful launch could bring some positive sentiment back into the market. But the real main event, the one that has every trader glued to their screen, is the US CPI Consumer Price Index report on Thursday, November 13th. This is the key inflation metric the Federal Reserve watches. The market is expecting a reading around 2.4% to 2.5%. If it comes in hotter than that, say above 2.6%, you can kiss any hopes of a December rate cut goodbye. That would likely send the US dollar DXY soaring and risk assets, including crypto, tumbling. If it comes in cooler, below 2.4%, the market will cheer, rate cut expectations will surge, and we could see a powerful rally. We also have a slew of other important data. On Tuesday, we get UK employment data and the German ZEW Economic Sentiment Index, which will give us a read on the health of the European economy. Throughout the week, we have multiple speeches from Fed officials, including Barr, Williams, and Waller. Their tone will be scrutinized for any hints about future policy. And let's not forget the UK GDP data, also on Thursday. It's a minefield of market-moving information. So, what are the big brains in finance saying about all this? The opinions are as divided as the market itself. On the bullish side, we have the ever-optimistic team at JP Morgan. Their analysts just reiterated a bold call, predicting Bitcoin could hit $170,000 in the next 6 to 12 months, citing the powerful tailwinds of institutional adoption. And they have a point. A recent survey showed that over half of all hedge funds are now invested in crypto. That's a monumental shift. We're also seeing major banks like JP Morgan, Citi, and BNY Mellon rolling out institutional-grade crypto services. The CEO of Standard Chartered, Bill Winters, even said he believes nearly all global transactions will eventually move to blockchain. That's not some crypto degen on Twitter. That's the head of a global banking giant. Even the political climate is warming up. President Trump recently praised crypto for taking a lot of pressure off the dollar, a complete 180 from the previous administration's hostile stance. This regulatory thaw is giving institutions the green light they've been waiting for. However, there are voices of caution. Cathie Wood's ARK Invest recently tempered their legendary 2030 Bitcoin price prediction, lowering their bull case from $1.5 million to $1.2 million. They cite concerns that some institutional capital is being diverted to other hot narratives like AI. We're also seeing significant outflows from the Bitcoin ETFs for the first time in a while, with a net $1.21 billion pulled out last week. This suggests some of the early institutional money is taking profits off the table. The Fear and Greed Index is currently at 23, which is extreme fear. While this can be a contrarian bullish signal, it also reflects genuine anxiety in the market. So, the long-term picture looks incredibly bright, with institutional scaffolding being built out at a rapid pace. But the short-term is fraught with risk, primarily from macroeconomic uncertainty. This brings us to the most important question: how do we trade this? This is a week for the cautious and strategic, not the reckless. Here is my playbook. First, risk management is paramount. This is not the week for high leverage. I would recommend a maximum of 3 times leverage for experienced traders, and for most, sticking to spot is the wisest move. Before the CPI data on Thursday, it would be prudent to reduce your position sizes. Never risk more than 2% of your portfolio on a single trade. Now for the strategies, I see 3 primary scenarios, and we need a plan for each. Scenario 1, the bearish breakdown. This is triggered if CPI comes in hot and Bitcoin loses the $100,000 support level. A 4-hour close below $99,500 would be my confirmation to enter a short position. My first target would be the $96,000 to $96,500 zone, which was the October low. My stop loss would be at $101,500. This is a high-risk, high-reward trade. Scenario 2, the range-bound chop. This is the most likely scenario if the CPI data is in line with expectations. We could see Bitcoin bounce between $100,000 and $106,000 for a week or two. For swing traders, this is an opportunity. You can look to buy the dip near $100,500 with a tight stop at $99,500 and take profit around $105,000. Conversely, you could short the resistance at $105,500 with a stop at $107,500. Scenario 3, the bullish reversal. This is our most hopeful scenario, triggered by a cool CPI print. The key here is confirmation. I would not front-run the data. I'll be waiting for a confirmed 4-hour close above $106,500 with a spike in volume. That's my entry for a long position. My first target would be the $110,000 resistance, and if we break that, $114,000 is next. My stop loss would be at $104,500. For long-term investors, this volatility is an opportunity. Dollar cost averaging into positions in the $96,000 to $102,000 range could be a very profitable strategy over the next 6 to 12 months, especially if JP Morgan's $170,000 target is in play. Finally, keep an eye on the US dollar index DXY. It has a strong inverse correlation with Bitcoin. A falling dollar is rocket fuel for crypto. Watch it closely after the CPI release. So there you have it, a market at a crossroads with powerful forces pulling in both directions. The long-term institutional adoption story remains incredibly bullish, but the short-term macroeconomic picture is a minefield. This week, the patient and disciplined trader will be rewarded. Don't get chopped up in the noise before the signal. The signal is the CPI data on Thursday. Trade smart, manage your risk, and stay informed. That's all for this week on Boni's Life. If you found this analysis valuable, please hit that like button, subscribe, and share it with your fellow traders. Drop your thoughts in the comments below. What's your prediction for this week? Are you bullish, bearish, or waiting on the sidelines? I'll be back next week to break down all the action. Until then, stay sharp.